What is going on, investors? Hopefully you guys are doing well out there. Earlier in the day, it was Mastercard, and now we're taking a look at Visa. They reported their Q1 earnings after the bell, and they were equally as strong as Mastercard on that revenue growth side. That came in at 23.9%, up to $7 billion in the quarter in terms of revenue. We'll jump over the financials here in a moment. We'll take a look at the revenue, the profit, the income, everything that I think you need to know from a fundamental base in terms of this quarter from Visa. Now, this company over the last year, stock's up only 1.9%. We do have a dividend on this one. The yield is really small, 0.73%, but I do want to point out with this dividend, if you got a kind of a longer term view on Visa, well, they're growing their dividend. I've seen 20% hikes. I've seen 17% hike. This was the most recent hike back in October. You'd expect a hike at that time every year. Well, they do hike it up pretty nicely. And so while it is small from a yield and relative basis, if you hold this stock for a pretty long time, I think eventually you'll work yourself into a pretty nice yield when it comes to Visa. Now, the other thing that I want to take a look at before we jump over to the financials is I want to take a look at this from a price to earnings basis. And I didn't do this with Mastercard, but I brought them both up here. So Visa's in this orange line and Mastercard is in the blue line. And this is a price to earnings, basically trailing 12 months on that gap. My guess is neither of these include today's earnings. I think it'd be somewhat irrelevant, but what we are seeing is that Visa is trading at about 36 times earnings. I know that's expensive, but look, you just put a quarter up where you did 23.9% growth rate. We just did a video on Apple and they grew, I don't want to say only, but they grew at only 11%. So you're getting pretty nice growth. You kind of have to pay up for it in these markets that we are in now, at least at the given time. Now, I've got a 5-year chart on here. I do want to show you with Visa is we've pulled back into, at least from a price to earnings basis, while it's not rock bottom, this stock has traded lower than 30 times earnings. It's at like in a comfortable range, okay? It's not a screaming value, but it's not as overvalued as it was at some time. This thing traded closer to 50 times earnings at one time. Now, Mastercard always kind of, most part, takes a premium or trades at a premium versus Visa, but they're both of them down from their highs. Just something that you want to think about if you're going to start a position in either one of these payment stocks. And I'll be honest with you, I don't necessarily have a favorite or one I like more than the other. I quite frankly own both of these stocks. And when we see deep pullbacks in these stocks, like occasionally you get these times when you go on kind of a major downdraft, well, you come in there and you buy the dip. That's what I like to do with these stocks. They are dividend growers, and I do like to have that as a portion of my portfolio. Now, we talked about how revenue came in at that $7 billion. That's 23.9% year over year growth. They talked about how we had that cross-border volume. Mastercard said the same thing, that increased by about 40%. We're seeing that those transactions are starting to come back. That is really good. If we can get back to this health situation, boy, I tell you what, that's a very, very bullish scenario heading into the summer travel season as people tend to travel a little bit more, especially cross-border, as we head into the summer season across the world. Now, moving into the financials, so we pull down this net revenues here at the top line, basically $7 billion. Last year we were sitting at 5.7. I thought that was good. Now we're even better. Let's see how well they've controlled their cost over at Visa. We saw Mastercard did a really nice job with this, and for the most part, we're seeing the same thing with Visa. We went from 1.83 billion on that cost side last year. Now we're up to about $2.3 billion. So you take this $7 billion, you minus off 2.3, and you come down here to operating income at $4.7 billion. That's really strong. Okay, last year we were sitting at $3.8 billion. You pay some taxes, you get some interest and things like that. Come down here to net income, you're right around $4 billion. Again, you're at a $400 billion market cap on this one. So, look, it's not a cheap stock. This is not a value stock. This stock, I don't know in the history, if you pull up like the max history of the chart, I don't know if this stock was ever a value stock, but look at the max history on that. Even like the 10-year chart is up 700%. This stock is just it's like a mountain, it just continues to go up. This is a solid stock, but again, I want to emphasize it's not considered a value stock. Now, moving on to the cash flows, we pull down that net income number. This is on a quarterly basis, and we see equally as strong on that cash flow side. We went from $3.5 billion in cash flows last year up to about 4.2. Now, they did spend some money on acquisitions, not as much as Mastercard, but we did spent about $830 million in the most recent quarter on that. And look, we did repurchase some stock as well. This company is executing a pretty hefty buyback. Last year, you only did about $1.8 billion on that buyback. Now you're doing $4.1 billion. Hello, we got these dividends paying. So it's showing you this company, they're actually using a lot of their free cash to actually just buy back the stock. They had $4.2 billion in cash provided by operating activities. They had about $500 million in terms of investing activities, and they did about $4.1 billion, and exactly $4.1 billion on this repurchase, and they paid about $809 million in dividends. All things considered, over the last quarter, this company did burn through about $1.5 billion in cash, but not to worry. We've got plenty of cash over at Visa. We got about $14.7 billion on this one. Not a lot of debt, okay? $17.6 billion in terms of long-term debt. About 3.2 of it is current. So look, we've almost have that in cash. And if you want to take all of the current assets, we've got well more than that. This is a very financially healthy company. That's another reason why you pay a premium for this, okay? Because the balance sheet is really nice, okay? It's not like perfect, but it's really nice. These financials are growing nicely. You're growing that top line. A lot of investors have also excused both of these companies based on that cross-border volume and payment volume kind of drawing up because of the health situation. A lot of investors have kind of given the stock a pass in that sense. Now, from a technical perspective, I do have this green line right here, this upper trend line, just to show you we're in a longer term uptrend, okay? Yes, it has some deep pullbacks. That's what I do like about Visa. Along the way here on this uptrend, we've had some pretty steady declines on this one, okay? So you've had some opportunities to pick this up as we pull back from the highs. More recently, we've been up over $250 per share on this one. We came all the way down to closer to 190 on this one, and now we're trading up in the after hours a little bit higher. We're up to about $206 per share. I see a hard line of support, pretty hard line of support. It's not like perfect, okay, because some of this price action kind of wicks through it, but there appears to be some support for Visa shares right at about $190 per share. We've kind of bounced off that level, and here we are closer to about $206 per share. There should be some overhead resistance at the thin red line. I don't know how hard this resistance will be. That's why the line is a little bit thinner. I'm not as confident in this, but I would expect as this stock, if this stock works up into this 218, call it even 220 range, it has done that multiple times over the last year and basically gotten rejected. Now, when it does break through there, it wants to run. I tell you what, you get above, we'll call it a little bit higher. I'd like to see this one get above about 225. You get above 225, well, I think you got upsides to retest the highs back up here at 250. On the bear case side, you would not want to see this stock break 190. You break 190 and who knows where this one would go. I think you're coming south, potentially even as low as 150. From a technical perspective, like I said, this one is in a long-term uptrend. It looks good from that sense. Shorter term, it looks like we're just starting to chop sideways. Not necessarily the worst thing. I tell you what, when you got a pretty premium valuation, that's not as rich as we've seen with Visa, still a premium valuation, not a hefty yield on this one, so there's no reason to kind of pile in there just for the dividend. But when you have massive revenue growth, if this thing can go sideways for a quarter or two, put up another quarter or two like this, well, it's going to grow really nicely into this valuation. And while it might not fit the traditional valuation, like value stock, it might be a value stock for Visa purposes or Visa standards. See if that materializes in the coming quarters. Let me know down in the comments what you think. That was today's video on Visa. Hopefully you guys had a great day. Good luck with your investments.